Imagine this, you walk into a shiny builder's sales office. Free cookies, huge windows, model home, smells like fresh paint and artificial happiness. A manager walks up to you, smiling like they're about to change your life. Today only, we're offering you a special mortgage rate, 3.99%. Maybe even 0.99% for the first year. Practically free money. Just sign here, here, and here, and you're standing there thinking, wait, regular rates are in the 6s and 7s. And these guys are offering me 4? Maybe it really is the perfect time to buy new construction.
If you're interested in all the nuances of such transactions, please contact Elena, our trusted realtor. She'll guide you through all the pitfalls and explain the potential risks and benefits.
And honestly, it kind of is. Builders overbuilt. A lot of their homes are just sitting there, and they are desperate enough to throw out crazy incentives and discounted mortgage rates just to move inventory. But here's the twist. That cheap mortgage might be one of the most expensive decisions you ever make. Let's talk about why. First, how are builders magically giving you 3.99% when the rest of the world lives at 6-something? They're not magicians, they're negotiators. Big builders go to lenders and do what's called a rate buy-down using forward commitments. In human language, that means they say to the bank, hey, if we bring you a big pile of loans from our buyers, can you give us a special lower rate? The lender says, sure, as long as you pay us a chunk of money up front to make that rate happen. So the builder writes a big check to make the rate look low on your paperwork, and then they tell you with a heroic face, we negotiated this amazing rate just for you. It's like your friend gets you a discount on a TV by using your credit card points. Here's the important part. Their goal is not to give you a cheaper house. Their goal is to sell at the highest possible price while making the monthly payment look pretty. So the mortgage gets cheaper. The house doesn't. When that monthly payment looks small and friendly, it becomes much easier for you to overpay on the actual price of the home. That's the first trap. You're staring at the payment, not the price. Imagine this. There's a new construction house at $400,000 that isn't selling. The builder has 2 options. Option 1, actually lower the price by 10% to $360,000. Option 2, keep the price at $400,000, spend some money to buy down your rate and make your monthly payment feel similar to what it would have been at $360,000 without ever dropping the headline price. Which do you think they prefer? Of course, they keep the price high. That way, the whole community looks more valuable on paper, their comparables stay pretty, and your brain sees a comfy monthly payment instead of an inflated sticker. You go home thinking, oh, wow, I locked in 4%, I'm a genius. But what really happened is you paid a premium for the house so you could feel good about the rate. It's like paying double for sushi just because they served it on a little wooden boat. Now let's talk about the fun word nobody likes to hear, underwater. Underwater doesn't mean pool in the backyard. It means your mortgage balance is higher than what your house is actually worth. You bought at a price the market didn't fully agree with, and now you owe more than you can sell it for. A lot of these builder-tied loans, especially the riskier ones like FHA for lower down payments, are already underwater. Same country, same economy, but a much bigger share of people with builder financing owe more than their homes are worth compared to people who used regular big lenders. Why? Because those special deals made it easier to push prices higher in communities full of new supply. Tons of new homes, lots of incentives, not enough buyers. If prices slide even a little, the people who paid the builder's full sticker price with the magical rate are the first ones in trouble. You move in, you hang the TV, you buy patio furniture, you grill once, and a few months later you realize, if I had to sell this tomorrow, I might need to bring money to closing. That's not the American dream, that's the American handcuffs.
And then there's the payment trap. A lot of these deals stretch people to the limit. You've probably heard that nice number, 43% of your income going to housing. That's not money left after taxes and groceries. That's 43% of your gross income before Uncle Sam, Social Security, and the "how is my phone bill this high" fee. Now imagine this classic builder trick. Year 1, your teaser rate is 0.99%. The payment feels like Netflix, gym membership, and Starbucks combined. So you think, we can totally handle this. What a steal. But a couple years later, that rate jumps to 3.99. Maybe some of the buy down wears off, maybe your taxes and insurance go up, maybe your HOA suddenly discovered they want a gate, a fountain, and a yoga instructor. Your payment climbs while your income doesn't. If you're already stretched and you're also underwater on the house, you're stuck. You can't easily refinance. You can't easily sell without writing a big fat check. You are now in a long-term committed relationship with this house. And not the fun, romantic kind. More like, we're staying together because you can afford to move out. So does this mean every builder deal is evil? No. Sometimes a builder subsidized rate actually works in your favor. But you have to treat it like a science experiment, not a magic show. Ask yourself a few simple questions. First, if I ignore the special rate for a moment, is the price of this house actually competitive? Compare it to similar resales nearby and other new builds. If everything else is $360K and this one is $400K, but look at your low payment, you already know what's going on. Second, is this a true fixed rate for 30 years? Or is this a temporary buy down that jumps later? If the payment today is wow, and the payment in 3 years is oh no, that's a problem. Third, what happens if I need to sell in 3 to 5 years? If the market softens even a little, am I still okay? Or am I writing a check at closing and crying in the parking lot? Fourth, have I checked with other lenders who are not the builder's buddy? Get a quote from the builder's lender and from at least 2 independent lenders. If the only way the builder's deal looks good is by keeping the house price high and buying down the rate, that's not a deal. That's makeup on a zombie. Now, is it a good time to look at new construction? Honestly, yes. Builders have a lot of inventory, they're offering big incentives, and they are way more flexible today than they were when everything was selling in 2 seconds with 50 offers over asking. But before you dive into that 3.99% builder special, stop and ask, am I getting a great mortgage or am I just overpaying for the house? What happens to this payment later? And if prices in this area take even a small dip, will I still be okay or will I be underwater? Cheap mortgages can be amazing. Overpriced houses with cheap mortgages, that's how people end up stuck. If you found this helpful, hit like, subscribe, and drop a comment. Would you take a 4% rate today if it meant paying extra for the house? Tell us your story, tell us what builders are offering you, and if you want, in the next video, we'll roast the worst special offers together and do the math on screen. Thanks for watching, don't drown in discounts, and I'll see you in the next one.